Crypto Dog to the rescue here. Welcome to my channel. Got a great video for you today. Going into technical analysis here, fundamental analysis, and sentimental analysis. I'm going to put it all into three parts because it's quite a lot of information. But at the same time, I want to start from the bottom, from the end, and work my way forward here to the beginning. So we're going to start with technical analysis on this one, and then we're going to move in to fundamentals and then sentiment. And let me break it down for you as far as what we're going to get into. But let's go over the market real quick and what's going on at the moment. And let me minimize my fat head, and we'll go from there. So, all right. So moving into the market here, as you can see with Bitcoin, it's gone down dramatically. It says it's 10,000 right now, but this is the coin market cap, and Ethereum's down to 335. So everything is obviously mostly red when it comes down to it. Tron is, fighting, what I mean? They're building Tron, so something's going on with Tron. But this one is about technical analysis. Let's get right into it here, and I'll show you exactly what I'm talking about here and what I'm using so you guys can actually see what's going on and what other people are talking about and where they're even going wrong with their technical analysis. I watch a lot of people, and a lot of guys are right on spot with it, but a lot of guys aren't using the technical analysis tools correctly to get what they want as far as, I guess, information. And again, I watch a lot of people, but I'm not seeing the same technical analysis when it comes to the tools that they're using. I'm not seeing the same thing because they're using things, I guess, differently than me. Is it incorrect? That's again with TA. That's why people really don't trust TA, because it's really, I guess optional, but there's nothing. They'll use the math is kind of my point. Don't use too much opinion on it. Use the tools how they're supposed to be used, and then use the math with it. So let's go over what I use here. I've used it, and I've said this in my simplified trading videos earlier. I use my moving averages, which is the simple moving averages. I'll use two of them. I'll use my relative strength index, the MACD, and the language of the candles, and then at the end Fibonacci. Okay, just to kind of put everything into calculation, a true and tried and true calculation from Fibonacci. So let's go into first things first, right? Let's go into the market. Let's see what's going on. Now, the blue line here is my 100 MA. The red line here is the 10 MA. Now, everybody uses the 20 and the 200. I absolutely started with the 20 and the 200, but I'm honing my skills, and I'm seeing, after tried and true methods, that I've honed it down to basically 10 and 100. Same thing, but it's a tighter average based on, I don't want to miss anything. As far as swings and volatility, this really cuts it down a lot more than you think. But that's because of the other things I'm using as well. It all correlates much, much better than the 20 MA. And it works tried and true. 7 out of 10 times, at least 7 out of 10 times, every time I trade. 10 times I win 7 out of 10. So I'm always in the green. Maybe it's not a lot, but lately it's been a lot, obviously. But now everything's kind of going sideways and down, and everybody's kind of getting scared about things, right? That's the sentiment. We're going to go over that in a different video. And then fundamentals, obviously, of the coin that you're into or whatever coin you're trading, obviously has a play in it. But let's look at the right fundamentals, or at least the tools that I'm using, so you guys can see what other people are using and kind of see where they're skewed or possibly you disagree with, right? So let's get into that, all right? So the 10 MA and the 100 MA. The 100 MA just acts just like the 200 MA and just like the 20 MA. It is the king, all right? The 100 MA is the king, all right? It has a magnetic effect, not a true magnetic effect, but it has a magnetic effect with these candles to where it's not going to stick around the 100 MA for very long. As you can see, it always goes away. You know what I mean? I wouldn't say dramatically, but it eventually goes away. You know what I mean? In the next 5 to 6 days, it can't stick around here. So it's just based on the average, because it's a 100-day moving average, not a tighter moving average like a 20 or a 10. So that's why I use the 10. I get so much more readings off of this based on the language of the candles, right? And we'll get into that soon. But the first things first, let's get into the 10 MA and the 100. The 100 MA is your king, okay? When it goes up, all right, it's basically saying that everything's looking good, right? It's you have to use the two together, the 10 and the 100 MA. Use them together to get kind of a good reading off of it. Now, a lot of traders, again, you know, I watch a lot of traders and investors. You know, I had a mentor back in the day. He's 40 something years old now, and he's a retired millionaire. You know, so he knows what he's doing in the stock market. He knows what he's doing when it comes to trading and candles and technical analysis, fundamental. You know, so this is where I got my basis from. And I've used everything in the book, you know, that you guys can think of: ribbons, band, Bollinger Bands, waves, propulsions, Ichimoku clouds. I've used it all and when it comes to correlating and indicators to get what you want, it doesn't work, you know. So I went back to basically the fundamentals of technical analysis, my basics, and it shows me so much more, especially with the volatility going on in these markets. So Bitcoin right now is at actually $9,972 on the Coinbase market, Bitcoin USD. So right now, that 100 MA is starting to flatten out, okay? A flattening out 100 MA or 200 MA, whatever you're using, when it goes flat, it is the king. It is the controller of everything going on, kind of the initial controller. So this is why I'm showing you this. I'm going to put it all together for you guys in this. So maybe kind of a stretched out video, but I want to make sure that I cover enough technical analysis to where you guys can keep watching the videos until I get to part 2 and part 3, and then you can put those all together backwards, right? Watch part 3, part 2, part 1, which is technical analysis, and put it all together. So first things first, right? The 100 MA, it goes flat. There is a huge magnetic effect to it, to where it's going to go up or down on there, and so keep an eye on that, right? That's a big minder right now. It's keeping an eye. Plus, it is your bearish and your bullish marker, whether we're in a bullish or a bearish market psychologically for a trader, right? Not an investor, for a trader right now, okay? So because that has very big significance with people who are trading, futures trading with other people's money, you know, so keep an eye on that. Keep in mind on that. And I'll show you a couple little tidbits that I've picked up on the way too that really has nothing to do with these basics, but I want to let you guys know that there's definitely some correlating going on as far as the stock market timing. Now the 10 MA. Now the 10 MA obviously is your tighter moving average. So when things go up and down, you can get some triggers off of this, right? Which way the angles of it, which way it's going, where the candles are, as opposed to underneath it, over it, you know what I mean? How thick the candles are, how weak the candles are, how neutral the candles are. Okay, language is totally involved with these candles because there's battles going on each candle. It doesn't matter if you're looking at days, hours, minutes. Doesn't matter. Just quicker battles, right, per candle. So honing your skills, start with the days and you start going down. Well, I'm an investor in Bitcoin, so I always look at the days. And it's easier to show you guys the basics on this, and then you guys can hone your own skills. So moving into this real quick, let me minimize this a little bit more so you can kind of get more of a feel here. So let's go back in the past here so you can see what I'm kind of talking about here, just on the 10 MA, all right? And obviously the 100 MA involved because everything's over the 100 MA. And it was going sideways not even a week ago. 1, 2, 3, 4, 5, 6, 7, right? 8. So going sideways here. As you can see, a lot of people ask you, well, it broke over here over the 10 MA, and you're saying, to buy the next candle when it goes up. Well, yeah, buy the next candle if it's green and you kind of know that it's gonna stay green. Well, this one was a huge fight all day long, and it ended up turning red for most of the day, and it ended up red. So when you have a red candle like this, right after it breaks the 10 MA, that's not a good sign for a trader and investor. It really isn't. Even though it went up, this kind of was telling you that there was a lot of speculation in here whether it's going to go up to the next one. Of course, the MACD was involved in RSI. But, just kind of showing you some little trigger points with the 10 MA. Trigger points, okay? Trigger points. Let's keep that in mind, okay? So it turned green, right? It had a fight. You see these wicks on here, all right? Let's get real close into here so you can kind of see what I'm talking about. You see these wicks on here, All right. When this closed, it would close red, so therefore it opened up red. So you got to think about it that way, that it actually opened up red and it went down to here, and then the greens fought it all the way back up to here, and then down to here. The greens finally, ended the day right here. So it's a fight going on. So you think about it, at the end of the day, the reds are eating it back up. And it's so probability wise, this is actually going to turn more green or more red because of the way that it ended, right? And then the way that it looks, it's more of it's a fat neutral, but it's more of a neutral candle because there was a fight at the beginning and a bigger fight at the end. So a little bit bigger. So little things, you know what I mean? The language of the candle can cause things to move, but again, you don't want to get too crazy with the language of the candle. You just want to get an overall statement of what's going on in these candles, okay? That's a very neutral red candle, very, very neutral red candle. So it kind of makes sense why it turned green. But again, had a battle, fatter, but still kind of neutral. And the reds were taken at the end of the day. So makes sense. So if you think about it, it went down, it went under the 10, right? Had a battle right at the end there, green. Started out green actually, went up to here, and then the reds took it all the way back down. You know what I mean? And now it's kind of fighting down here. You know what I mean? It was fighting down here. And then obviously turning green and now moving. So when it broke the 10 MA, okay, on there, it broke the 10 MA. That is actually considered breaking the 10 MA. So once it starts going down to probably about right here, people just start, bang, 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 bang. Traders, day traders, swing traders, they just start getting out because, went all the way up to 12,000. Now it's back down to 12, under 11,000. You know what I mean? It starts doing that. People start going out real quick. They want to keep their money. They want to keep their profits. So it's the language candle and the 10 MA and the 100 MA have a big thing to do with each other. And if you can kind of hone those initial skills, learn those things, exactly what the 10 MA simple moving average is as opposed to the exponential moving average, what the 100 MA and what the 10 MA, it's the same. It works the same as the 20 and the 200. I've just honed it in to get it tighter and more reading into the market. Instead of these ribbons and these waves and everybody's like, oh, it bounced off the 20, and just wait, yes, you can, but that's more of reactive than being kind of a little bit more proactive as opposed to what's going on right now in the market. Nobody can tell you what's going on in the future, but the past can really tell you what's the probability of it going the right way, or at least what you're thinking, right? In the way that you're thinking. So right now it's going sideways, and it's really testing on that 100 MA. That's a bad thing and a good thing because we really want it to test to see which way it's going to go. The 10 MA is on an angle down. It's gapped away from your candles, so which means it's going to meet up sooner or later, right? More sooner than later. It's going to meet up with your candles, whether the candles are going to go up, whether they're going to go sideways, or it's going to go down, and this angle is going to even be even more dramatic down to get back to these candles. So magnetic effect is kind of in play here. With everything. I apologize if my head's in the way, but the magnetic effect is going to be here just based on how gapped the way it is. It's starting to come back, as you can see, but it's starting to retreat back down underneath that 100 MA, which is possibly not a good sign just based on it's going to have a magnetic effect sooner than later when it comes to that. So keep that in mind when it comes to the 10 MA and the 100 MA. Same thing as the 20 and the 200. I'm just getting a better reading out of it, just based on me honing my skills over the past 2-3 years of working this market with the volatility comparable to the stock market. TA's works the same. It's just more volatile. So which means I had to change my styles a little bit, just a little, to make things to get better probability readings off the market. So another thing I use is the relative strength index. So the first things I look at is the 10 MA, the 100 MA, obviously the candle language of what's going on, and then my relative strength index. And as you can see on the relative strength, it is down here at like 34, 35 right now. It's kind of just going sideways after it took the big dump. And if you kind of look back here, the last big dump that actually went under the 30, it kind of sets it right here already for you at 14-day close between the 30 and the 70s, kind of, I guess, the corridor that it works in for the most part. But in March, it dropped down underneath there. And now we're kind of just trickling down here. Will it have the same effect and drop down, or will it go up? Well, to me, it looks like it has a lot more room to grow than it has room to go down, right? And when this happened, it was dramatic, and it didn't really just hang out around the edge here and then drop. It hung out a little bit and then boom. So the probabilities are more favoring now, today, as opposed to yesterday, the day before. It's probability wise, it has more room to grow than obviously it has room to go down. Okay, so that's one thing that I use. Now, just keep in mind that all these indicators that I'm using and all these platforms I'm using is anybody can use these. I'm not paying for anything because I want to show you guys that anybody can do this. You know what I mean? You can work this and you don't have to pay to get these things moving. So where's the MACD at? Let's get into the MACD because that's my last one, and I always show everybody the MACD so everybody can see what I'm talking about. Now, the next thing that I do is I change my MACD, and I always get rid of the histogram because the histogram doesn't show you really anything. To me, doesn't show you anything that helps you out in the probability wise. Too many things going on, too many indicators going on, and they start not correlating. You know what I mean? So here's the MACD. I put it at 440 with the close with the close at 9. And the reason why I do that is based on mock trading and years of this trading. This was the best setup to see where your buy and sells are, where your convergence and divergence are, to get sell points and buy points off this. Now, as you can see on here, it came up as we saw, go on the sideways market. Remember, I was talking about these turned red right here, but it didn't get to a sell point. You know what I mean? And that's kind of a sign too. When it goes over the 10 MA, there's more, it's crossing, not just close. As you can see, it's just close on that red one. But it really didn't cross because it was a fight and it ended up being red for most of the day. So on the next one, it kissed, but it never crossed. You guys got to really watch that too, that it has to cross over and really be, I guess, confident, you know what I mean, where it's going. But as you can see where it's sitting over the zero, you know what I mean, quite a bit over the zero. So, it had more room to go down than it had room to go up. So it kind of tells you the probability of it going up more, you know what I mean, into this 12,000, and make a new high. The probabilities were very, very low. You know what I mean? You have to kind of put your probabilities together as you're putting these things together. You know what I mean? And even back here, the RSI was higher. You know what I mean? So it had less room to grow. So you got to kind of consider these things when you're looking at each candle, what's going on. Put them together per candle, and then you can kind of see what's going on in the market now. Okay, so again, right now, the RSI is down here close to the 35, right? So it had much more room to grow. So with the MACD, you can see that it's gapped away from the buy point, sell point. Didn't go into a buy point back here. So went obviously more sell point. So it stayed in the sell point, don't buy. And now it's starting to, wave flat. The 100 MA is flat, 10 MA is coming down. Your divergences are starting to come flatter, and it's still gapped away. So, is it telling you that it's going up? No, it absolutely is not telling you that it's going up. But it is under the zero mark now. Okay, so that's a good thing. As you can see, the last time that it went down under the zero and stayed down there for quite a bit was when we were in a bearish market, and it stayed down there, right? And now it's come back up to the zero, kind of waved around over the zero, and now it's finally gone down underneath the zero again, and it's gapped away. So is it going to wave back up over the zero or not? Sorry, my fat head's probably in the way. Apologize for that. But is it going to gap away over the zero or not, right? So that's kind of what you have to look at here. Maybe let me get my fat head out of the way, and maybe that'll help out a little bit. Did my fat head go away? No, of course not. There we go. So that way you can kind of see everything I'm seeing. So 0 to 0, right? And 9,000 right now and going sideways. So yeah, so it's gone under the zero and it's gapped away. So consider, those things going on, okay? You got the 10 MA, you got the 100 MA, you got your candle language, you got your relative strength index, you got your MACD, and all these things will give you way, way, way more information that correlates, okay? It doesn't even have to correlate, and they'll still give you information that you can use. All these other things that I've used, even if it doesn't correlate, doesn't give me any information at all that I can't see myself just using these 4 or 5 things. And the last thing that I use is the Fibonacci. And I'm going to show you guys how I used it because everybody seems to use it differently, okay? So to me, I use this on a yearly basis. I'm an investor in Bitcoin, so I'm going to use this on a yearly basis. And I'm going to go back to the last high to the last low because we're not in a high right now. If we were in a higher high right now, I would consider this the last low to the new high. But now I have to go from the last high to the last low. So left to right, okay, low to high, or high to low, because that's what's going to give me the retracement back up, okay? So it's gone back down, it's retracing, I guess considerable to this to retrace. Now for a year, just over a year, I think this is back in like June, June, and now we're in August, September. So a little over a year, all right? So moving forward, this is a downward market, downtrend for the Fibonacci. Use this for a downtrend, all right? Left to right. Let me kind of fix it so it gets a little bit better so you can see calculations of tried and true calculation of Fibonacci that's calculated out of cousin numbers. I've seen people using this, and because, man, they're going off of macro and then they use their Fibonacci into micro, and it doesn't work, and I don't understand why they use it that way. And these are people that have thousands of subscribers, hundreds of thousands of subscribers, hundreds of thousands of views. Okay, fine, you know what I mean? But I just don't get, where they get their Fibonacci's from, and when their tools are not working in the same way. If you're looking at everything in a macro view, work everything in a macro view. Stop using things in macro and then looking at a macro and then putting 20,000. Doesn't work. Too many indicators, too many things going on. Just doesn't freaking work. So this is simplifying it for you guys, so you guys kind of see what's going on. I'm not making up these numbers, and I'm not making up the way that these tools are work. This is how these tools are work. You can use left to right or right to lefts. You have to invert everything when you do it that way. So this is just the easiest way and tried and true method of doing it. Last high to the last low, okay? If we had a new high to the last low, it would be a different scale. It'd be inverted, you know what I mean, with the scale. So moving in, okay? So now you know what the 10 MA does, what the 100 MA does, what your MACD does, what your RSI does, what the candle language does. So now the MACD is the Fibonacci is your cousin numbers, okay? So now, right now, it's at the 618. Okay, it dropped down and now it's testing at that 618. Very important number, very, very important number with the Fibonacci. The reason why I say that is because the halfway point on a Fibonacci is not a real Fibonacci number. It's just that big gap between 618 and the 316. There's a 382. Sorry, 618 and then 382. So there's a big gap in between. So that just helps cut it up a little bit. Now, investors do use that. Reason why is because if it goes down, most likely, probability-wise, it always goes down to the 382. Okay? The 618, if it goes over this and kind of sticks around in this corridor, as you can see right here, in this type of corridor, 618 to the halfway mark, okay, more than likely it goes and stays around the 618. So as you can see, it popped up. So, the way I'm doing it is correct, okay? And everything works together. I mean, I see people, again, they use micro indicators with macro and, look at things. If you're going to do micro, do everything micro. If you're going to do macro, do everything macro. It's kind of that easy, but I don't understand how people can throw 30,000 indicators in here and then try to throw it out on you guys and try to say, hey, look at all this. I've been tried and true. No, you've been lucky. You know what I mean? Really. And a lot of the things you even said with the tools you're using don't even work. And you just got lucky because you're using 30,000 indicators and 10 of them work together. You know, I could do that all day and give you guys information that works for nobody. Doesn't work that way, and I'm not going to do that to nobody. You know, so that's kind of, you know, that in a nutshell as far as technical analysis. Okay, you guys want to think about that with technical analysis. Look at it from a macro point of view, trade it in a macro point of view, and use your tools in a macro point of view. If you're going to go micro with everything and trade on a weekly basis. Look at weekly Fibonacci's. Look at week, you know what I mean? Change your MAs to something that's going to work for you. Change your MACD to whatever it needs to be worked for. You know what I mean? That shows you the right indicators, the way things are going to go. You know what I mean? Things like that. So keep it in mind, you know what I mean, when you guys are trading. So I want you guys to really, really learn this and really be successful in your trading. I don't want you guys doing all this and then watching other people and then going, oh, well, this is what they said. Well, look at what they're doing. And maybe you'll go, you know what, I totally disagree with what you're saying, or I kind of half agree. So keep that in mind, guys. You know, my name's Crypto Dog to the rescue. Please like, subscribe, hit the bell, comment below. Has no value to you, has great value to me, and the dogs I'll be rescuing in the future. You guys keep up the grind.